Mi- Mr. Hajime Taniguchi. Mr. Olagunju Oshimolowo. In the interest of time, may I like to now invite on the dais Mr. Arun Soundarajan, Country Manager at Tradius India Credit Management Services Private Limited. Mr. Bhavesh Patel, Country Manager and CEO, COFAS India Credit Management Services Private Limited. We would also request the panelist, Mr. Manuel Moses, Chief Executive Officer, African Trade Insurance Agency, and Mr. Sarvesh Suri, Director, Climate, Energy, Extractives, Financial and Capital Markets, Multilateral Investment Guarantee Agency, to join virtually. The session is moderated by M. Senthilnathan, Chairman cum Managing Director, ECGC Limited. Shri Senthilnathan has joined the session virtually. Shri Senthilnathan has started his career in 1988 and has served various capacities in the different offices across India. He played the role in redesigning new insurance products for exporters and banks, addressing the requirements of mercantile and service exports and that relevant lending by the banks. Over to you, sir.
Thank you very much. Thank you. Good afternoon, my co-panelists as well as participants, and thanks to Exim Bank for this opportunity to interact with the distinguished panelists. Just to set the ball rolling, we all know project exports or medium and long-term exports, popularly called MLT exports, supports industrial, social, and agricultural infrastructure in many countries, and power generation, distribution, and industrial projects in many countries are met by project exports. The key feature of a project export that makes it successful and beneficial for all the stakeholders is that financing as well as credit risk insurance is taken care of by specialized agencies, and the beneficiary countries' requirements are met, and it leads to the economic activities in the beneficiary countries, generates wealth for the beneficiary country, in turn enables repayment of the credit taken for the project and over a period of time, so that at the end a successful project delivers value for the exporters, value for the funding agency, and the insurance agency gains business, and ultimately the beneficiary country gains the required infrastructure or other projects, and also economic activity gets galvanized in that country. But all said and done, there are certain developments in the last few years. I've seen that there are few large countries which does most of the projects, and country like India, which has been traditionally supporter of medium and long-term projects and very active player in Africa in the early 1980s, 90s, and as well as in Middle East region, and as sort of slight setback in terms of projects supported by commercial lenders as well as other lenders. Of course, projects supported under line of credit as well as multilateral agencies have been undertaken by Indian project exporters continuously. But in the last 15 years, under the initiative of Government of India, a specialized trust has been established, National Export Insurance Account Trust, through which credit insurance cover is given to Exim Bank to finance the project exports from India on a plain vanilla buyer credit basis, and the risk is undertaken in the NAI trust. But the capacities remains around around 6 billion under NEA trust, and the line of credit and project supported around the line of credit over somewhere around $10 billion. Compared to global requirements and also the requirement in terms of our target market in Africa as well as South Asia, particularly Latin America, the requirements remains very economical. We would like to we would like to discuss ways forward that will ensure the steps needed to make it more resource available to undertake more projects in the target markets for the benefit of all the stakeholders. So we have seen that in the last 2-3 years, the risk in terms of project exports galloping due to pandemic as well as the recent threat of inflation in many markets. So that also needs to be taken care of by the ECS while ensuring a project. So with these comments, I would like to request my panelists to give their comments and observations with regard to opportunities in medium and long-term project exports for Indian project exporters, especially in target markets like Africa and South Asia, and also one of the key providers of long-term political risk insurance, as well as a model for multilateral agencies. Representative from MIGA can give his comments on the opportunities globally, and also my colleague from ATI, Mr. Manuel Moses, who is a multilateral agency established under the UN Charter and doing great work in Africa, to come in and give his comments. I would like to start with Mr. Arun Soundarajan, and then I will come to you on that. Yes, Mr. Arun.
Thank you. Thank you so much, Mr. Senthilnathan, for the introduction. I represent a company called Tradius, which is a cross-border trade credit insurer. Now, trade credit insurance is, of course, an insurance product that covers short-term credit and also long-term, but in India, we normally do short-term credit. Now, what Mr. Senthilnathan has actually started the discussion is very important for us today. How do we ensure that we seize the opportunity in project finance, especially with the kind of projects that are coming in today? I believe there is a huge gap in the availability of project finance, especially for contractors. Maybe not the Tier 1, Tier 2, but definitely the Tier 2 and Tier 3, where there's this massive gap on the availability of high-quality capital. Now, where credit insurance comes in is that we can be in a position to bridge this gap. Now, all over the world, in fact, in Europe and Asia, banks have taken advantage of capital relief as per the Basel III. You know that capital adequacy norms are tight, and the availability of high-quality capital is. So they've taken advantage of insurance-based credit, which helps them raise high-quality capital at a reasonable cost. And this has given a huge advantage for contractors within Europe and Asia, and China, of course, being backed by Sinojob. So in that respect, my comment to you, Mr. Senthilnathan, is that India is uniquely positioned to take advantage of this opportunity, but there has to be certain policy initiatives, especially by the government on the RBI, to look at some capital relief to banks, to take a CRM model, a credit risk mitigation model as a basis of capital relief, which will then open up an entirely new market, completely different, and we'll be in a position to compete. If you just give a broad number comparison, we're talking about 9 billion, 10 billion of exports and projects, and compare it to China, which is about $1 trillion plus, and only going to go more, especially now when there's so much volatility. There's a huge investment in infrastructure across Asia, across the world, climate, renewables. So the opportunities are massive, and Indian contractors, Indian suppliers are uniquely positioned to take advantage of this. So as we are today, we have the opportunity, but we need the policy initiatives. That's my initial thoughts.
Thanks, Mr. Arun. And shall I go to request Bhavesh to give his comments, if he's there?
Yeah, thank you, Mr. Senthilnathan. So to continue from what you said and what my colleague, Arun also just mentioned. See, the basic thing is structured finance definitely helps project exports, especially with mitigation from credit insurers, And now we have the ECAs, we have the NEIA, which has been supporting, we have ECGC supporting us. Uh, Another angle which I would want to add is that, we from the private side, bringing private capital, bridging the gap, achieving financial inclusion, we can help with the distribution risk, and or participating and co-insuring, which eventually brings in the practice of, more and more insurance-backed, structured, financed project exports, So not only the capital relief and the other stuff, and as most of you would be aware that 50% of the structured finance credit insurance is actually bought by lenders. Of every 100 policies sold, 50 are bought by banks all across the world, So this is a very, critical part. It should be, given a boost. And I would end this by, bringing in the point that while, the recent, say, capital infusion in NEI is going to boost, and Arun spoke about it, Senthil sir, you spoke about it, I mean, where we are, China talks about 1 trillion, we were at about 9 odd billion, and with this new capital infusion in NEI, we will jump up by another 5-6 billion, more. But there's still a long gap, which we from our side can, help, and especially supporting the MDBs and Exim Bank of India and ECGC. So happy to participate, and I think we take this forward, from there. Thank you.
Thank you, Mr. Bhavesh. Now, I would request Manuel Moses to give in his observations as a user of this from African perspective, where the requirements are huge, as well as a provider of credit insurance as a multilateral agency supporting projects within Africa and also from outside nations to export of projects from outside the African continent, but inside into Africa. So your views, please, Manuel.
Thank you, Mr. Senthinathan, for this opportunity, and good afternoon to everyone. Yes, indeed, our experience has been that we have seen quite a huge increase in the use of our products following this pandemic that we are just emerging out of. The gap is just gonna get bigger. I heard the trillion-dollar gap is just going to get bigger and bigger. Why? Because I think the awareness for risk is increasing. Exporters are realizing that they need some form of protection, and when they approach their banks, they are not getting adequate tenor. They're not getting adequate terms that make the projects bankable. This is where we come in on the African continent to try and plug the gap. So I want to echo the comments from my previous speakers on how can credit insurance be recognized from a capital relief perspective. We are rated A+ by the international rating agencies, and that should count for something when on the portions that we cover as insurers. So that could also help in bridging the gap. But indeed, we have seen the trade between Africa and India really grow exponentially, and we expect it to continue to grow. So we need innovation. We need to bring in more capacity to make all these very, very impactful projects come to fruition. So this is one area of the trade between India and Africa, but there's also the other side of Africa exporting to India. And again, we also want, we do support, exports, and we are, looking for buyers in India, and we would also use our products to support, exporters exporting into India by giving them credit insurance. So really, the leverage effect that insurers provide is very, very vital. So those are just my opening remarks, and saying without this, type of leverage, it will be very hard to bridge the gap that we are all discussing. Thank you.
Thanks, Manuel. I now request Mr. Sarvesh Suri, representing MIGA, as a provider of credit insurance to complex projects in all over the world. Your perspective, sir, with reference to multiplying opportunities for project exporters from India and also project beneficiary countries and mitigating the risk. Please, sir.
Mr. Senthilnathan. It's a pleasure to be here. Thank you for inviting Meager to join this eminent panel as well. Uh, Let me just step back and explain what Meager is and what kind of products we have, and then I'll come back to answer your question. Meager is part of the World Bank Group. Within the World Bank Group, there are three main institutions, IBRD and IDA, are collectively known as the World Bank, where they provide funding and technical assistance to developing countries all across the world. IFC is the second largest institution, and they provide funding and technical advice to private sector enterprises. And I guess a lot of companies that are present in this room today may have worked with them in the past. Liga is the third largest institution in the bank group, and we operate somewhere between the public and the private institutions. Our objective is to facilitate cross-border trade, cross-border investments, companies from India exporting to all over the globe in developing countries through providing non-commercial risk insurance. We have three insurance products. The first is, as you said, Mr. Senthilnathan, a credit enhancement product, where for government projects, government procurement, either at a sovereign, national, subnational, or at SOE level, we can support development projects across developing countries by helping the sovereign raise long-term borrowings from commercial lenders. Mr. Patel was talking about how lenders constitute a lot of cross-border investments that take place based on credit insurance, and that's indeed correct. Meager's credit enhancement product under Basel III norms, we have legal opinions that say that because of us being a multilateral and equal and AAA institution across the globe, our credit products accord full credit relief to the lenders globally who use Meager products to make these loans. That allows these commercial lenders to be able to issue long-term loans at extremely thin pricing. The second product Meager has is political risk insurance, where we work with private sector companies, where we work with both equity as well as lenders to reduce certain political risk as they invest into emerging markets. The third product, just like ATI mentioned recently, Mr. Moses mentioned, from our side, we just approved a trade finance product where we are working with partners such as IFC, such as EBRD, and others, including potentially ATI in future, where we can complement their ability by providing trade finance support through SOE financial institutions across the globe. Now, I'll just talk about a couple of examples of projects where we have supported. We've worked with Tata Power. We provided them coverage for their equity investment in a hydropower project that they had invested in Georgia a few years back. Within that project, the lending came from multilaterals, including from EBRD and IFC, but we provided our equity political risk insurance to them on the equity side. I think a lot of panel members have mentioned the power of capital relief and if it could be accorded to banks, how it could help to increase lending and support for these kind of offshore projects. And I fully agree with that. I think we've seen that regulations play a very strong role across the globe in allowing flow of capital from one country to the other. At this point of time, I see it's a unique opportunity for Indian exporter and Indian companies to invest across the world. The multitude of crises that have hit the world, starting with COVID crisis a couple of years back, the climate crisis that we are all living in today, and what we need to do both on the mitigation as well as adaptation side, and the economic impacts of what we are seeing in Ukraine today, have created significant disruptions in the supply chain for commodities, as well as for projects across the globe. The countries are a lot more indebted, including in sub-Saharan Africa, and the need for private sector investments and cross-border investments could not be greater. So at this point of time, there are significant opportunities that are opening up, and we can talk about it as we go along in this discussion. Back to you, Mr. Senthilnathan.
Thank you. So I take it that credit insurance is very critical in enabling project exports, and capital relief by regulator will go a long way in enhancing the resources available for lending, as well as credit insurers, export credit agencies. Insurance cover will become based on the insurance cover. If capital relief can be provided, it will amplify the resources and also benefit all the stakeholders. That's a great comment. But I also understand MIGA is a pioneer in the political risk insurance, where the export credit agencies supported by the national governments are um, not in a position to take risk, because the worst of that or beneficiary countries risk is perceived to be higher. And apart from that, that MIGA has also pioneered a lot of complex projects involving various nation as well as various providers and all. And I understand MIGA collaborates with it. One of the discussion point that we thought was that the going forward, private, public, and multilateral credit agencies, as well as financiers in Exim Bank, like government supported export import, as well as multilateral development banks, and even private commercial lenders should pitch in case of huge size of projects. So I would like to hear your views in such a collaboration and future for such collaboration and stakeholders points to note. Mr. Sarvesh, if I can come to you first on this.
Yeah, that's an excellent point. I think if you see the needs of what we need to achieve in terms of infrastructure development, in terms of food security, healthcare after COVID has become a very important agenda as well. We are talking about close to about $4 trillion of funding that's needed across the globe in developing and emerging economies. About the public sources complement only about 1.5 trillion out of that. So there is a significant need for private sector investors to play a role in providing the remaining $2.5 trillion of funding that's required. At this point of time, the private sector investors only complement around $300 billion of funding on an annual basis or so. So it's a huge, huge agenda. I think no agency or multilateral agency such as the World Bank Group, any private entity or any commercial entity as such is unable to play the role. So the partnership and are working together in complex transactions is extremely important. I'll give you an example of a project that we have just signed actually today. It's a very innovative structure that we put together to help achieve just that goal. We're working with a Norwegian company called Scatec, which has multiple power sector solar energy projects in Egypt. These projects were operationalized about 2 to 3 years back, and now they are all operating assets. So now that the projects are operating, initial funding for these came from DFIs. What Scatec did was they worked with commercial lenders to refinance the loans on these projects through a green bond structure. In that project, MIGA, we worked very collaboratively with EBRD. EBRD provided liquidity facility, we provided a breach of contract political risk insurance cover, and we developed this instrument in a very innovative way, this combined project that allowed the project to refinance the loans at a much cheaper price than the initial cost through by achieving multiple credit notch upgrade from the sovereign rating of Egypt. So we both put a little part of our balance sheet, but the money for these funding came from institutional investors from all over Europe. And by doing so, the DFI who had initially lent to the projects, their capital got back to them. They could invest into other greenfield projects. And through the green bond structure, we were able to get money that's locked up in capital markets, earning very low yield right now into development cases. So we, in MIGA, we see partnerships as one key way for us to be able to growing our development impact across the globe.
That's a great example that you have given, and it's a nice way to go forward. and especially the issue of green bonds and credit costs have come down, means that project viability also improves, so that the repayment will be strengthened, that capacity. That's nice to know, Mr. Sarvesh. I would request Manuel Moses to comment on this aspect, collaboration by multilateral ECAs and private public ECAs, as well as lenders also from lending side, and any innovative structures that he has come across, so that the lessons can be spread across, and all the stakeholders can benefit from that. Yes, Manuel.
Thank you so much, and it's good to see my brother Savesh, my former colleague, on the other side. Yes, indeed, we are also, trying to make sure that we bring more and more capacity. This issue is about bringing capacity, and not one, institution, multilateral, can tackle all these needs. And innovative solutions are always welcome. So one initiative that we are piloting in Africa is to create a core guarantee platform, working with the African Development Bank, IEC, the Islamic Development Bank arm, and Garant Corps, and ourselves, and hopefully in future also with MIGA, to just say, how can we all bring the innovative capacities that we do have? How do we attract the reinsurance capacity from the private market? Because they have the bigger balances than we do. Us as development institutions are just, working on the, showing the way, doing those innovative structures, and hope to attract even the private sector insurers to do so. But we are the ones who do the most difficult ones, and hopefully those models can be replicated. Otherwise, it's very, very hard to tackle this huge gap. And then collaboration also with the lenders. I think I'm glad to hear about this collaboration that has been mentioned in Egypt. You need a lender that is also willing to work with us to make sure that we do give the benefit of a project that has been de-risked, so that it can actually release capital for other more developmental projects that would come through in our countries. So we welcome this initiative, and the whole idea is to bring like-minded, innovative colleagues who are tackling the most difficult challenges of the world. How do we finance climate change, which needs in the order of trillions? We will need to be innovative in insurance. Insurance, which we are providing here, has got a very important role in terms of leveraging financing that would otherwise happen. As an example, just us as at ATI, we are capitalized to the tune of about $500 million. But through this reinsurance market, we are able to mobilize close to 6 billion, which is about 12 times the leverage of our capital. So imagine if we were double our size, all that. So the leverage effect of insurance is quite huge. So really, that's really the message I want to pass to the colleagues, and the colleagues, that you need to allow for insurance market to work, because it has got huge capability to fill this big gap that we are trying to tackle. Thank you.
Thank you, Manuel. Now I would request Arun Soundarajan to pitch in, because both the panelists have said that way forward is a collaboration with the private, public, and multinational agencies in insurance, as well as lending in case of multiplying opportunities in project exports, as well as exploiting, as well as benefiting the target nations in getting the required infrastructure projects, and also enabling them to trade, because without a proper infrastructure, their trade also will suffer. Now, I would request you to give your observations from the private sector's point of view, and also to comment on the risk, because there are certain political risks which private players, as an individual player, may be willing to take, whether association with the multilaterals and the government back constrains you, or will it be a challenge for you? Like in case of Ukraine and Russia war, some nations, some governments have said that they would like their companies to back away from Russia, or in some cases, like some of the democratically elected governments have been thrown away once the project got finalized. Project is under execution phase. The democratically elected government has been overthrown by an autocratic or military regime. Private players may continue based on the commercials, but working with government-backed agencies or multilateral, or do you see it as a challenge? Yeah, your comments, please.
Bhavesh, if I may. Yes, Ms. Senthilnathan, I wish I had a straight answer for this, but I don't. It is definitely going to be a challenge. There's no questions about it. But you're absolutely right when you say that there has to be a way forward. It cannot be the same products, vanilla products, trying to be sold across. It has to be innovative thought. And I'll set a cat among the pigeons here. A lot of us have also been accused of being too traditional. You know what I mean? It's just too traditional. It's just that you're used to a certain way of doing it. That's the way it's done, and that's the way it will be. But I think we need to change that whole mindset. We got to think of innovative solutions, partnerships, co-insurance, building up capacities, etc. So that's the only way forward. How it's going to work? Yes, it's going to be a challenge. But having said that, personally for ourselves, and I could probably talk for Bhavesh also, is that we had some experience with collaborating because we ourselves are collaborators in the Indian market with our Indian insurers. So there's some experience there. But I do believe that collaboration and innovative thought, innovative solutions, like project finance typically is not a trade credit product, okay? But we have to think about it in terms of collaborating, because that's where the market is. That's where the market is going. And that's where, as Sarvesh has said, climate change, renewables, adaptation, mitigation strategies, these are where the investments are going to go. And if you're going to lose an opportunity based on pure traditional thought and traditional mindset, then definitely we'll have to, we won't be able to take advantage of it. But you're right, absolutely. I think we need to take advantage of it. We need to collaborate. There will be challenges, but we'll have to figure out a way in which we can maneuver that. So yeah, that's my thoughts.
Thank you, Mr. Arun. And Bhavesh, your comments on this collaboration, and as a distributor and as we've experienced distributor of insurance product as well as bringing too many players together. Your experience of bringing many players and more the challenges that you have seen, and how do you see things going forward? That this will become an order of the day, or this will be one of a thought process? Yes, Bhavesh.
Yeah, thank you.
Yeah.
See, collaboration is the way forward. Actually on the private side, including taking MEGA and World Bank help, even transactions up to $2 billion have been stitched up. And I'm talking insurance collaboration, not the investing and the funding side of things. I'll only speak on the insurance side of things. So, and that is what is required, is the need of the hour from an Indian perspective, I would say. If private capital in terms of insurance, sitting behind MDBs or multilateral institutions like, ADB, MEGA, Exim Bank India, ECGC, if we can collaborate and participate to whatever extent we can participate, it just, relaxes the stretch on the NEI account. I'm looking at it from that perspective. You can use the NEI for more long-term strategic critical stuff, where traditional insurance distribution is available, then we would be happy to help, and we do help, So this is something, which we want to, or at least from our side, we want to encourage that, that let's have more collaboration and more, participation. Happy to, be, behind the multilateral institutions and just lend our support, because I think that's the need of the hour, and I already gave the, the China and the NEI example, so I think if we have to bridge those gaps, we need to have more and more insurance. And mind you, insurance in tough situations, it's also how contractually they are drawn up, and we will follow the leaders, as we say, in the sense if the multilateral institutions are leading the thing contractually, so we just simply follow. And, in political risk insurance, in the CF and the CND covers, non-cancelable limits and non-cancelable covers are also possible, So it's also how you structure these things, which ensures, these sudden issues like how we are facing the Russia-Ukraine thing, and, and brings jolts, to the world, So there are ways and means, and innovation is also coming in slowly, more and more innovation. But yes, I think we should go ahead and explore this collaboration much more seriously, Thank you.
Thank you, Mr. Bhavesh. You brought a very vital point in that multilaterals can be the leaders so that others can follow. In fact, that comment I want to elaborate on that. We understand ATA has got a preferred creditor status, with member states, and MIGA being the arm of the World Bank will have a better strength to negotiate with the beneficiary country where it is the project is executed on the basis of sovereign guarantee or sovereign requirement. So do you think, Mr. Sarvesh, that MIGA can be the lead insurer and willing to take national ECAs or the contributing nations ECA on panel so that the risk can be offloaded by MIGA, or it is African nations, the ATA can take and risk can be part of risk can be taken by MIGA. Do you think that is a workable model and that will be a very great assurance for the future?
Thank you, Mr. Senthilnathan. So definitely, I think the insurers, the multilateral insurers such as ATI, MIGA, and others have an advantage in the sense that we have what is called a preferred creditor status. As part of the World Bank Group, we kind of have a unique position there because the countries, the more the country is in a difficult situation, the more they need the World Bank's help. That's the reality. So with that, we, as I mentioned, partnerships is very important, as Manuel was talking about, and other panelists have also said. We also have a very strong focus on reinsurance. We have a portfolio close to about $23 billion, of which we have our own risk of around $8 billion. The remaining, close to about $15 billion, has actually been reinsured with other multilateral, other ECAs, both as well as private sector reinsurers across the world. So we'll be very happy to do that. And what we've also done is working innovatively in certain projects, like for example, in an agribusiness project in Sierra Leone. It was a Japanese company that was investing. We worked with Nexi, which is a Japanese ECA, who helped reinsure us both and what we were able to do was to, because of the Japanese government requirements, their pricing that they charged was much lower. MIGA, as a part of the multilateral institution, we have to charge commercial pricing according to our ACOR mandate. So we worked and passed on the benefit of the cost reduction by reinsuring through an ECA to the corporate entity. So we are very happy to partner, and this is a very strong focus for us, allowing us to allowing much more development impact than what our balance sheet itself can afford.
So for final quick comments from Manuel on this, then I will.
Thank you. Yes, we also, have that unique advantage, especially in our member countries where, we have this preferred creditor status. I usually don't want to exercise it, but when we have to, we will do so. But what we've seen over the time, and this gives comfort to our insurers, is that we can actually work around those solutions with those governments and not necessarily have to pay the claim. But it is just gives the comfort that we can, if we have to really, have that access to the government and really have this important conversation. Sometimes it's just a disagreement that can be resolved without necessarily resulting in a claim. But yes, we can also crowd in others to be behind us so that we give the same benefit to co-insurers, reinsurers, because we are in front, and we give this benefit to everyone for the benefit of our projects, for the benefit of our economy. So yes, it's a very important tool and should be used sparingly.
Yeah, that is right. I think the way I see preferred creditor status is not as a way of recovery mechanism, but as a way that it has a implied guarantee from the beneficiary country for a continuing credit discipline on its part, that they will obey credit discipline, so the repayment chances are they will repay and honor the commitment. That is an additional implied guarantee from them. That's how I see it. That's why I said this. So my quick summation will be that we see credit insurers playing a very great role in multiplying opportunities for medium and long-term projects and enabling financing resources. And the products given by credit insurance agencies enhances the credit and brings down the cost for the benefit of all the stakeholders. and government regulatory support in form of capital relief to the lenders for lending to medium and long-term projects where it is backed by credit insurers products should be the way forward, and government support for export credit agencies, lenders as well as insuring agencies is one of the most critical elements. And the way forward, as demonstrated successful execution of projects in many countries by MIGA as well as ATA, is collaboration with the multilateral as well as private as well as public insurers as well as lenders. And yes, it also gives us certain challenges, but collaboration is the way forward so that all stakeholders can gain. So with this, I would like to close our this thing here, unless we have some questions from the audience to any of the panel members. And I know that Mr. Arun Soundarajan is short of time. If any questions are there to Arun Soundarajan, I will request audience to give it to him first. Otherwise, the other panelists will take the questions for some. Yeah.
Thank you so much, Mr. Senthilanathan.
Yeah, just before going for the questions, may I request Shri Ramesh Sir, DMD, to hand over the customized Sankalp Taru Foundation certificates to the speakers. These certificates to the virtual panelists will be couriered to them.
Oh,
Mr. Arun Soundarajan. Mr. Bhavesh Patel.
Any questions from the audience side?
From audience, we can close the session here. Yes, please.
Sir, we will collect any questions asked over online or later part of this particular program, sir. We'll revert to you. Sir, very sincere thanks from India Exim Bank for taking time out of your busy schedule. I know you really accommodated us for this particular session. Mr. Suri, good to see you. Mr. Samuel, thank you for joining this particular conversation. And thank you both to be available physically here. Sincere thanks to all of you to make this program very successful. Thank you, sir.
My sincere thanks to everyone, the audience, and Mr. Senthilanathan, Mr. Manuel, Moses, Mr. Bhavesh. I really appreciated the session, and I hope you had some value to add. Thank you so much.
Thank you.
Thank you. Thank you.
Thank you. Thank you.
See you.
We will have a quick break of 10 minutes, please. Our next session will start at 3:30. It is panel discussion on emerging opportunities in newer sectors and markets by Indian project exporters and experience sharing. Thank you.